folks, and welcome. We're seeing more and more people joining this, so I think we will start it off and let the latecomers hop on. So thanks for joining us today. We know a round of beer is probably around the corner for those in Europe, considering it's a Thursday and it's about to be the evening. I also appreciate the ones who had an early start on the East and West Coast and probably joining us from Canada and South America. If you're a corporate leader investing in innovation and struggling to see business results, then you're not alone. Many organizations are running what we call very impressive pilots, but then they hit a wall when it comes to scaling these across the enterprise. And I think today is a very challenging time where the rising economic pressure, pressures on sustainability, looking at climate impact, and so on, this gap between innovation and implementation is now not just a missed opportunity, it's becoming a competitive risk with a lot of companies. So I'm super happy to host today Callum Cameron, the CEO of Edasi Lab. Callum's notable projects, and I'm going to list them out here, include venture clienting for Premier League clubs to reduce emissions, helping a Nordic telco internalize innovation processes, and developing Estonia's country as a living lab program. I will ask you more on that later, Callum. But when we kicked off promoting this event, there was this mouthful sentence that I'm looking forward to, which is to look at battle-tested strategies to build and operate successful corporate innovation pipeline that delivers measurable results. So this is a mouthful. Let's get you to simplify it, Callum.
Thanks, Vihek. And hi, everybody good afternoon from sunny Tallinn in Estonia. Hopefully just around the corner from a lot of you there. Yeah, I was looking at the title a few times myself, and do you know what? Unless you're a geek, it's pretty dry. It probably doesn't make a lot of sense to those outside the industry who aren't already doing this right. But I think we've all seen a lot of these corporate, government, industry innovation activities that start brilliantly with lots of fanfare, lots of excitement, lots of energy, and then just die. And part of this is because there's no sort of thought out plan for actually where they want to get the new ideas, the new innovations, the startups to at the end. And this is what having a good pipeline is about. It's actually creating that plan of stages, gateways, and I guess roadmap from getting from ideas all the way through to that impact. So let's see how we go on this. Let me just flick over to the deck. There we are. Okay, yep, that is me. I've been in corporate and government digital transformation of one form or another at technical level, project level, design level for about 25 years. About 10 years of working with startups in that time. And with Edasi Labs, our agency helps governments and corporates innovate to accelerate their sustainability journeys. So in particular, we work with collective innovation processes to engage the whole of society in creating whoever's vision of abundance that we're actually designing for at the time. I won't go into this in detail. You know all of this. We need changes that are perhaps quantum leaps in so many different areas, from every level, from mindsets to technology at the moment. Those leaps come from innovation, and we need to do that at massive scale to overcome the challenges we have as companies, as countries, as regions, and as humanity. Corporates are essential to this for scale, expertise, funding. I'm going to present very high level, largely to stimulate, perhaps provoke some discussion here as well. So please do interrupt along the way. Mihak is going to be monitoring the chat. I'll stop after any slides if there are questions for them, or if you want to discuss a point, or if you want to even challenge a point, I would love to hear from you, because obviously there's a lot of expertise on the call here. So we'll go quickly through the innovation mindset, dive into pipeline design with a couple of examples there, then talk quickly about working with startups and the special considerations around that, then practical considerations for when you're designing and implementing your pipeline, and most importantly then, how to think about starting fast. So here we go. Innovation mindset, fast. First, designing your pipeline, designing your corporate innovation programs and strategies. Do think like an investor. You have a thesis about what to invest into, and by invest, we're talking not only about funding, we're talking about internal capabilities, other resources, times, even branding in there. You want to make a series of small investments into these experiments and then just double down on those that work. It's a standard funnel investing approach. And in fact, with the Nordic telco that Mihak mentioned earlier, we actually transformed their entire project management office or program management office processes to actually work on a basis of thinking as investors. So projects would pitch for money to actually get the sort of funding and support they needed up front. And then they would come back on a regular basis to give updates and to pitch for that next round of resourcing that they were looking for. And of course, do have a portfolio approach across all of your investments. Think as a startup. And this is both for your pipeline itself, your own processes, and for the experiments or the experiments that you run. In this case, your customer is your company or your industry, whoever you're actually designing for. Their business objectives actually frame the problems that you're working on. Innovation, in a very broad sense, is your solution here, and your pipeline is how you deliver it. So designing that pipeline to give every idea the best opportunity is seriously important. Follow lean startup processes, build, measure, learn. Again, this is both for the pipeline and for experiments. Start small, build, measure what you're doing, learn, rapidly iterate, and always be iterating. You're going to make a lot of mistakes along the way until you get it right. And in fact, you're never going to finish the design, right? It's always going to be a work in progress. So do communicate this to your sponsors early days, that you can't think necessarily in too much detail, say 5 years ahead, that you've got to map out a roadmap for them, what you're going to do, how you're going to get there, but then explain to them along the way that you're going to learn, get better, and then scale. It also helps, again, if you ask for limited resources up front, so you can run your first experiments, right? So start small, move fast. And think in systems. Your pipeline, your innovation activities are running in the context of your organization, which is running in the context of the wider sort of market, industry, tech ecosystems, and so forth. So do think about the interactions that you're going to have with those and the feedback loops it's going to be part of, the changes you're going to create and the changes that are going to come back to you. Do target leverage points to create change faster and to amplify it. Always look to create pull through the system. Instead of having to push changes all the time and push ideas all the time, find ways of convincing people or finding where the pull already exists. And again, this is sort of standard startup or entrepreneurial process, right? And of course, constantly nurture your community, because again, you're existing within the context of those ecosystems. You depend on that community inside the organization and outside the organization. So do constantly nurture and work with them. That was it for mindset. So designing your pipeline. First of all, think about alignment, boundaries, stages and gates, and then portfolio management. We'll dive into those in a little more depth now. So with alignment, aligning with other strategies in your organization and the ones that influence it is super important to any sort of success. Because if you're not aligned with those strategies, if you're not aligned with the objectives of your other stakeholders, they're going to get busy. They're going to get busy with the stuff that they're measured on, right? So if an innovation pipeline actually supports their objectives, actually creates wins and successes for their other measurables, and that's constantly communicated to them as well, and that's super important, right? Constant communication about the wins that you're creating for them and how you're doing that, then the activities are going to get a lot more support. So first, business strategy. Strategic business objectives will normally need to be sort of twinned with any of your sustainable innovation activities, right? Any innovation activities, and even more so with sustainability actions, because essentially that's what keeps the businesses alive, unless the business is already designed as a sustainability first or an innovation first, which is very cool business. Align with market, operational, HR objectives. Work out, is innovation already part of your business strategy? If you have, again, that's amazing. So is innovation already there to deliver greater impact? Competition, branding, is that how they talk about the company? These would be great wins if you can align with those already. Align with organizational strategy. So what are the team structures? What are the workflows and processes? Like I said, look at the PMO, look at your procurement teams, see if you can align with what they're doing or even help them adapt. And also talent development. Innovation programs are fantastic for actually developing and retaining talent inside larger organizations. And then finally with the cultural strategy, right? So see if there's already an entrepreneurship mindset, see if you can develop that entrepreneurship mindset. Also look for any resistance to that mindset. We had one of our clients who really only wanted to do have an internal strategy. They didn't want to work with the outside world because they felt too threatened by the competition. So they wanted to work purely internally. They wanted to somehow promote innovation and entrepreneurship inside the organization, but all of the ideas had to come from the C-suite, and all of the products and services had to be approved by the C-suite. So you can see there's a bit of a challenge there. So do work out what the cultural strategy is, and if you need to, if you can work with it, if you need to shift it somehow. Is there a sustainability mindset already? Does that need to be adapted? Are there cross-department collaborations, or is that going to be a new idea as well? And remember, say that innovation activities can actually include experiments in shifting those areas, which is why I'm sort of saying the strategy all along the way. It might not be the organization as it is now, but the organization may aspire to being more entrepreneurial. It may aspire to being sort of more sustainable. And by running these innovation activities, you can actually catalyze that activity. Okay, boundaries. So first thing there was the alignment with your strategies. Now onto boundaries, and there are lots of boundaries you want to think about when you're working, when you're designing your pipeline, and when you're working out which areas you want to play in. So the first obvious one is the TRL, or the technology readiness level. Do you want to go in really early and start with R&D, sort of fundamental R&D? Do you want to go sort of mid-level, start with prototyping and piloting, or do you want to go into the late level, sort of go to market and scale up? And to be honest, most corporate programs, except sort of deeper industry, most corporate programs go from sort of the late mid-level through to obviously that late level going to market. Some, particularly those in high-tech industries, will start with the R&D level. Next level is the commercial readiness level, or the commercial readiness index. This is something that's used by the ARENA, the renewables agency in Australia. Look at or agree a time horizon for getting your solutions to market. If, of course, you're going to market, but if you're looking to take new solutions to market, agree a time horizon with your sponsors day one. This is really important, because otherwise, if there's confusion around that, then you're going to run into challenges of keeping the program up and running. Do you want to start already with sort of market tested solutions or market ready solutions? Or are you happy to take on the risk of new products, new services that haven't been tried yet, don't actually have that validation or that feedback? Quite often for new programs, it's a good idea to actually start with quick wins. So using market tested or market ready solutions as your first run, just to actually get past some resistance inside your organization, or actually sort of inspire the organization to think about what it can do if it did it all by itself. Third one is your innovation ambitions. So you're just looking to innovate on your internal processes, create internal efficiencies, being more cost effective and so forth, or more sort of sustainable internally. Are you looking to produce new products and services? Do you want new business models? Or do you even want to create spin-outs and startups off the side of the company? Then ownership model. Are you looking to only do internal deployments, in which case that's pretty easy? Do you want to co-develop, or are you open to co-developing with external partners? So doing joint ventures and the likes. And then do you want to sort of fully externalize your commercials? And so perhaps actually not do anything internal, but build and invest into totally external companies. All of these questions sort of impact your IP considerations, legal, compliance, incentive structures, all these sort of things, right? And then strategic fit. So do you want to just focus on your organization's existing core, their business areas that they're already in? Or do you want to look at adjacent or exploratory bets? And again, this is a way that a business can look to expand, or an organization can look to expand relatively cheaply, is to set up innovation activities adjacent to the organization that then actually experiment in these new markets without impacting internal resources and brands. What's your geographic market scope? You're looking globally, you're looking regionally. Time horizon, again, do you want your experiments, do you want to run experiments that are pretty short term, like sort of months to a couple of years? Or are you ready to go long term, sort of like greater than 5 years or so? Again, most companies actually look to do a mix, but when you're starting out, it's a good idea, I think, to start with short term, because you get the feedback loops faster and you can actually learn and scale more effectively that way. Also, without that sort of clarity around the time horizons, the sort of short-termism inside the business can actually kill positive or strategic innovations. Work out your impact criteria. What's in and out of scope? Are we talking just emissions, efficiency, biodiversity, circularity, growth? Which ones are definitely in scope? Which ones are definitely out of scope? Which ones would be lovely if they get impacted but aren't important? And then onto the collaboration model, which deserves a slide of its own. So do you want to go open or closed? Closed being fully internal, open involves collaborating with external stakeholders, academia, industry partners, startups, government, and so forth, right? The benefits of going open, I personally think, justify all of the hard work involved in that, because you can bring in new intelligence and a diversity of ideas that you may not have internally, or you may not have opened up yet internally. This is really essential in like sort of fast changing markets, and also I think with wicked problems where their success or any solution's success is going to depend on a number of external stakeholders. We'll engage them from day one in actually building the solutions. And if you think about a lot of renewables rollouts and so forth, there's a lot of NIMBYism. But if you engage those people from day one in actually building out the solutions, then you've got a far greater chance of success in getting them rolled out and scaled. Open also gives you the opportunity to, or it helps you to expand your capacity to act by depending on external resources. It gives you the opportunity to contribute to developing the wider ecosystem around your organization, around the market, and influencing that. And also that inspires some talent flow back into the organization from outside if you do a good job around that. And of course, wonderful inspiration for internal staff. So it's also a great way to kick off a new program. There are, of course, challenges when you go open. Things like there is additional resource investment needed, because now you're having to build the partnerships. You're having to do the due diligence on potential partners out there. You've got to work out IP, these sort of things. There's a risk of the sustainable viability, so the financial sustainability of potential partners. And there are always going to be cultural challenges. Sometimes partners will be moving faster, moving slower, and they'll have different priorities to yours. So many organizations do opt for a hybrid approach for different stages, and we'll look at one just now. And it'll change during your journey as well, right? But I do say that if you're in an organization which is already highly entrepreneurial, if there's a lot of innovation happening already, and particularly if your organization members or the people inside your team, the organization team, are already well connected and active outside the organization, then it may not be necessary to go the open innovation path. But if you're finding a lot of reluctance or resistance to change inside the organization. And a lot of organizations do feel that it's just impossible to change anything in this place, right? There are too many rules, we're too busy, so on and so forth. Quite often, actually, running a quick program of open innovation, bringing in ideas that are already working from outside and getting them implemented either internally or as a joint venture actually opens up people's minds and gets them super excited to see what they can actually do themselves inside there. So it's a great way to break it open. And then you can follow on with internal capability or capacity building, capability building. And then when your processes are more mature, perhaps open up again for deeper engagements. So EDF Pulse, I don't know if people have heard of this one, but it's actually quite a big, well-established program of a number of different activities from EDF, the French energy giant, right? So Pulse's core thesis is that it's good business and they're good investments to accelerate decarbonizing power. And they've actually, the whole program has been inspired by startup thinking and by startups. They're also a great example of how they've identified different boundaries, different stages, and created unique programs for each one of them, because each stage is going to need a different approach in there. So they've got their incubation program, which is a pipeline for their employees to turn their ideas into startups or new business lines. So they provide the internal support for that. It's open to all of their employees, and I believe 7 or so new subsidiary companies have actually been created by EDF through that process. Some of those companies have been invested into by EDF Pulse Ventures, which is their CVC, their corporate VC, which invests into clean tech startups, not just energy, internal and external. They do, I believe, Series A, Series B, 3+ million tickets going in there. They then have Connect. So incubation is purely internal. Ventures, internal, external. Connect is their open innovation platform. So this connects EDF projects with external partners and startups, helps scout them, facilitates the partnerships, the pilots, and so forth. So that's where they hit their open innovation. They've got the Pulse Factory, which is about actually developing the culture and the capabilities inside for innovation inside EDF itself and its group of companies. And then you've got Pulse Awards, which is purely for external startups, where winners receive funding and potentially mentoring and pilot opportunities with EDF. So from what I can see, and I won't claim to be expert on this, I was just really inspired by what they've built here. What I can see is they've got stages TRL sort of 3 to 9 covered. They've actually got a separate R&D program, which includes also external collaborations in there. So they've combined the closed and the open. Most are internally run, but they do actually collaborate on external industry programs like the Global Energy Startup Program, Free Electrons. And this actually just goes back to my point before about thinking in systems. There are quite often other industry competitors, partners, stakeholders who are trying to do things similar to you. You might find that it doesn't make sense to actually duplicate what they're doing, but actually to come together as an industry to create the scale and to share the costs of those innovation programs in there. So see what other pipelines are going on out there, or see if you can actually, if somebody's already doing something, see if you can do the next phase or the prior phase to that to build together. Just something else to think about when you're thinking about boundaries and how to frame this. I'm a big fan of the Amidia, even if I can't pronounce it, I'm a big fan of the Amidia Networks continuum, where they're an impact investor if you're not aware of them. And they look at everything from providing effectively grant money to create a particular market impact for sustainability or their sort of, I think, sustainability and also for human impact. At the other end of the spectrum is obviously investments which are sort of pure financial return investments. We can think about this from an organization perspective as well. So some of your innovation investments and activities will be focused on purely creating impact inside the organization. You might be looking to change the culture, create efficiencies, create impacts that actually don't have a direct financial return or an obvious sustainability return. But at the other end, you might be working on ones that will purely generate commercial returns or investment returns for the organization. I think it's really good to have that discussion early days with your C-suite and your sponsors as well. And it doesn't have to be one or the other. Just be aware that there are going to be different opportunities in there, and you might want to take a portfolio approach to hit them all. And then the other model is McKinsey's 3 horizon models, which is really more about sort of ambitions and your organization's readiness to innovate, right? So Horizon 1, you've got just incremental organizations inside the core business. Horizon 2, you're looking at emerging opportunities that are sort of adjacent to what you're doing already. And then Horizon 3 are your breakthroughs, your moonshots, which are going to change the future of your industry and the future of your business as a result. Again, work out which ones you want to play with. Actually, before I jump onto stages and gates, are there any questions at this point? Does anybody want to take a quick breather while I take a breath in there as well?
We don't have any questions coming in, but Callum, I'm keen to ask you at this stage, when you talk about working with the right partners, especially in organizations that are either doing it for the first time or have a slightly closed culture, how do you find the right external partners? Is there a simple line in the sand and you say, yes, this works and this doesn't?
Yeah, you just like ChatGPT, right? Find me partners. Boom, done.
Is there
Normally
a size
it'll be through it. Oh, sorry.
I'm saying, is there a size or mentality model when working with partners? Like someone like EDF is extremely structured, but where you lack that structure, are there some tricks of the trade that you will probably share with everyone?
You're thinking so I guess if you're thinking as a startup on partnering with the bigger organizations, then normally if they have a startup program, then they'll understand your way of working and can help adapt to that and help you adapt to the organization. If you're the corporate organization, if you're an EDF or the likes, a lot of that's going to come from your personal and your professional networks. It's not going to, again, it's going to be a difficult one to do sort of the market sizing and so forth. It'll actually be an internal discussion to say, okay, look, who is it that we're best off working with on this stuff? And maybe even reaching out to competitors and other industry partners to ask them what they're doing and seeing if you can play at that level.
Great.
It's very much, there aren't unfortunately prescriptions, right? Because it's a real pain with this. So what does your innovation pipeline look like? It depends. Everything depends on your culture, your ambitions and so forth. And then working through, again, your personal and professional networks in your team to get them in.
And I'm sure you've got this for the next one, but as you go through the example pipeline and stages and gates, it'd be lovely to also understand what are the early signs that this pipeline is working or failing. But I leave that back to you to talk us through it.
Cool. Good point. Let's get on to the stages and gates then. Okay, let me flick through this quickly and then go into an example. So having clear, and this is just an example here, but having a clear pipeline with those stages, what's expected at each stage, and the gates, what happens, how you choose between pulling a project from one stage to the next is super important. Firstly, it's signposted so people know what to expect. Ideally, it's realistic, or at least it can be challenged if it's clear and it's put out there. When you put them in, when you put in your sort of criteria for each stage and your expectations of each stage, make sure that assessing them, measuring them is actually super low friction. Work out if you can capture data along the way instead of having to stop the whole process while there's an extended period of people umming and ahhing and considering and thinking and so forth, which then just destroys the momentum in the project. particularly if you're working with external partners. Again, they might wander off if you can't actually maintain that momentum. And of course, keep any of this transparent and well recorded, so you can go back and show why things were changed. Also, why a project was or wasn't continued there. The EDF POS program, for example, just have relatively simple criteria for the technical and commercial viability of an idea or an experiment, their business plans, their prototype development, and they get assessed every 3 months, I believe, with the business units for a go, no-go decision there. The other thing is consider iterating through them. It doesn't have to be necessarily a go or a no-go. It could be a not yet as well, or it can be, oops, it wasn't ready, let's jump back to the prior phase. Again, you just got to work out whether the current project has sufficient potential impact on whatever metrics you're looking at and has the business support to take it back a stage and then redevelop for the next phase in there. So time is, of course, flying. So quick example here. I'll try to make it quick. This is one of my own use cases from working with the Estonian government. Accelerate Estonia was the Estonian, or is the Estonian government innovation lab. The purpose of it is to leverage Estonia's legal and regulatory responsiveness to then accelerate solutions that have massive potential impact globally, but would create an economic footprint in Estonia specifically in the process. It's an open model. It uses, again, collective innovation processes using the country as a test bed framework. I can go into that a bit more later if that's of interest. And we develop pilots and living labs with the entire, with industry and civil sector in Estonia for global startups and global SMEs who've got the challenges that we want to work on. So we work with solutions that are generally the upper level of TRL and the CRL scales. So they're market ready, global impact potential, teams can be from anywhere, but they're constrained by legal or regulatory barriers, which we consider to be our USP, that we can help actually, if it's relevant and if the government's up for it, we can actually help find the models, the regulatory models and the legislative models to actually enable some of these solutions. And they have to be aligned with our current public sector priorities or missions. So things like sustainable construction, combating disinformation, future of work, mental health, these sort of things. Here are the high level stages for each, in the pipeline for each cycle. The cycle lasts circa 9 months for each, call it a program, but it's highly flexible, because something that we've understood is if we're going to work on these massive challenges, these big problems, then we can't be too formulaic in our approach to it, right? So first we identify the possible missions in the public sector. Then we discover those missions by doing a deeper dive with the specific ministries and agencies that are responsible for them. We also check or test the ecosystem readiness to actually pilot solutions in Estonia. And part of that is building a mission board or an innovation committee, which contains public, private, and civil sector actors to help us actually choose, evaluate, and support solutions through there. Again, we want them to evangelize those solutions that come through if they genuinely believe they're working. And that way we can get a better uptake in Estonia and then pushing it to the rest of the world. The sort of aside here is that the discovery or the use of the discover was actually really important to make sure that our sponsors, actually also the participants, but our sponsors understood that we didn't have definitive answers, that the whole program was about discovering each phase. And again, this is very much a startup approach, right? So then, having discovered the missions, we then discover the specific challenges that the ministries and the agencies are prepared to actually put their resources into. Then we go out and we discover the ideas, which are basically in our language, the ideas were the solutions coming from the whole world to solve those particular challenges, ones that were, again, relevant to what we're doing. So we would then sit down with the public sector champions of those solutions to see the potential of the concepts, their specific challenges, their legal, regulatory challenges around the world, whether we could help and whether it was worthwhile helping. We then went into solution discovery, which was around designing the public sector changes and the pilot of whatever the solution was. And it doesn't need to be a technological solution, right? It could be an organizational solution of some form, or it could actually just be a policy change that's needed to actually open up a new industry. So something around novel foods, for example, or vending of pharmaceuticals, these sort of things. And then part of that process was also committing the public and the private sector stakeholders to actually put their resources into making the changes and running the experiments. And then the moonshot phase, or the discover moonshots, was we run the pilots to prove that pilots or living labs to prove that this will work, hopefully. And then we prepare the public sector changes that get taken to the government cabinet and then launch. Just looking at the time, I'm going to flick through this one, which goes through the actual high-level activities that we did there.
Kalam, we have a question coming in here where Paul was asking if A only accepts applications of companies that need public sector changes at the Estonian level, or it's public and private. And again, is it limited to Estonia, or is there a slightly wider EU approach as well?
Okay, it's so it has to be for solutions that need public sector involvement or intervention one way or another. And normally that means policy or legal change or sort of regulatory change to enable them. If those don't exist, then stay the hell away from working with government. Even with a relatively agile environment like the Estonian public sector, it's slow. So stay the hell away from government unless you actively need them. The companies are accepted from anywhere in the world. The idea is, though, that they will work out the policy, legislative, regulatory model and prove it here in Estonia. And from there, they can then scale across the EU, because at least on paper, the other EU members should accept that policy model, or at least they can see how it works. And then we would help, or Accelerate Estonia would help with evangelizing that in those countries. Hopefully that covers it.
Super.
And these outcomes here, again, I won't dive in deep because I'm aware of the time here, but these were effectively the sort of the KPIs or the metrics for each phase. Do we have these sort of boxes ticked? And quite often these are also, it's hard to quantify some of this stuff, whether a relevant prototype has actually been delivered or not, whether the team really is executing or not on what they need to do. So there's a lot of discussion between the core Accelerate Estonia team, private sector partners, and our mission board to determine those. Quick aside here, so pipeline government, mission boards, innovation committees, super important to oversee the pipeline, to give it legitimacy within the organization or within the ecosystem. That can be, and that legitimacy also means sort of continued sponsorship as you push through it. It could be a single centralized committee. It could be a hierarchy of committees. For example, you might have an innovation committee for each of your sort of specific business streams, renewables, e-mobility, digital services, and so forth. You'll also want sort of defined roles in there for strategic oversight and for reporting to the innovation committee on specific topics, structured gates and so forth in there. So with Accelerate Estonia, and apologies for the professionalism of these wonderful slides. This is stuff that I'd sort of developed historically. I thought there was no point in tarting them up too much. But as you see here, we had these sort of clear phases in there. Each phase, there was a gateway after which we would then go to the relevant sort of, I guess, selection team or oversight team for each one of them. So when we were shortlisting proposals or ideas, it would actually just happen within the Accelerate Estonia core team. When we were looking to actually bring teams into the deeper program, which would happen after the opportunity discovery, then we would engage our mission boards, our ministries and so forth, because we might also at this point be talking about providing funding for them as well. And then we go all the way through where we also need to bring in industry partners all the way up to the prime ministerial level here in Estonia. Accelerate Estonia is a 12 plus month cycle. And in theory, it's 9 months, but effectively it's sort of 12 plus months for each cycle. You can do the same thing, of course, much, much faster. This is an example of a very rapid 6-week cycle. Another 13 weeks if we include the scouting beforehand, but a 6-week cycle we did with one of the English Premier League football clubs. The innovation committee in this case included the club owner, business owners and investment team. So we had that really high level buy-in there. And we used Shark Tank style reviews at 2 phases to determine whether to progress teams or not through the different phases in there. Their purpose was to experiment with digital solutions and Web3 solutions from startups. They weren't specifically about sustainability, but there's a really cool story about how we got a sustainability startup effectively sort of through the back door. Because what this startup was offering was to digitalize their entire football pitch and then to provide that data as the platform for any sort of AI models they wanted to run on top of there for their team strategy, for their game strategy, for their training strategies, for their, obviously for the pitch management itself. But what was, so that got the club owner and the sports director really excited about it. But it was the facilities management team, not the sports director, who actually was responsible for paying for solutions for the pitch. What they loved though is that the solution, just purely by digitalizing this process, was actually going to save the club masses on energy expenses and on water expenses, because they could be far more targeted in their treatment of the pitch, which then got the branding or the marketing team very excited, because now they could talk a wonderful sustainability ESG story out there as well. So it's both, again, with developing your pipeline and with the solutions coming through it, it's really important, in standard enterprise sales here, right? It's really important to make sure that each of the key stakeholders is addressed and gets what they need. And it's even better if you can give them a story that they want to go and tell to others out there. Portfolio management, I'll skip through again, but again, think like an investor here. Make sure that you remove underperforming projects super fast. If it's not working and you don't see it working in the sort of the foreseeable future, and it could be because it's not a fit for the organization, it could be because the technology is not ready, it could be because the team is not performing, then you're doing yourself and everybody else a favor by killing that project as quickly as possible. Do think about spreading your investments across the different phases of the pipeline. Make sure you've got something going all the time in each one of them. And also, if there are different themes that you have to address, then obviously look to spread the portfolio, spread your investments across those themes as well. Do consider also your exit strategies up front. So when do you say that you're done? And this goes back to the boundaries, right? When do you say that you're done with a particular project? Do you integrate it with existing business units, spin it out as a standalone venture, or do you go into licensing and IP transfer with it? Okay, that was the deeper dive. Quickly going into working with startups, and this one's very sort of dear to me, having worked a lot with startups and with corporates, and seeing how it doesn't always work because they just don't understand one another necessarily. I think it's getting better, and I think a lot of you will know that as well. It does seem to be getting better because there's a lot of cross-fertilization, but there's still a lot of misconceptions about each other. So quick story here. For the first Premier League football club that we worked with, the request was for us to actually run a corporate accelerator program for them for early stage startups. And I actually refused to do that because I'm not a big believer in external corporate accelerators for early stage startups. There's just a bad fit there, right? And the startups are joining because they think they get the opportunity to sell to that corporate or to that enterprise. The enterprise team members, the business owners and so forth, are investing their time and resources. And remember, these guys are super busy, investing their time and resources, thinking that they're actually going to get new solutions that they can work with. And they get quite excited for the first week or two, maybe a few weeks. But then as the program rolls on, everybody gets disillusioned. And you'll find again that the business owners start getting super busy with other stuff that they get measured on. And the startups get disappointed because they're not getting what they need. They're not getting the interaction that they need in there. So we changed that design rapidly, and the club agreed to do more of a sort of a challenge and a deal-making program where we brought in market-tested or market-ready startups that they could already start using their solutions, and then perhaps start integrating them into their core as well. So wonderful positives about working with startups. They can bring in novel ideas. They can create wonderful energy and inspiration for your internal teams. And it's also a way of de-risking your own experiments to see what works or not, because you're outsourcing them to a separate company, right? There are challenges. As I said, there's the cultural side. There's different expectations there's potentially different expectations from both sides. Actually, you know what? There's pretty much always different expectations from all sides. And that's something that has to be addressed up front when you're talking with the startups and when you're talking with the corporate sponsor. And remember that startups are experiments, which means they're doing a lot of learning on the fly, which means they can't always commit to delivering what you need them to deliver. You've got to be agile or flexible in your timescales. Other considerations is, as I was saying with that football program, do consider what the value is for both sides, and particularly the startups themselves. Business owners in corporates are super busy. So are startups. Time is everything. It's basically all startups have. And if once they've spent it, that's the end of their company if they've run out of time. Target the right stage, and do consider, again, working in industry-wide pipelines. Quick practical considerations, and I'll flick through these and quickly wrap up. So do consider IP and procurement processes if you can. Simplify those for speed. Again, if you're working with early stage teams or early stage teams outside, then see if you can postpone those decisions around procurement and IP, and have that conversation again up front and say, look, if we find we can check X, Y, Z boxes through experiments, once we've done that, then let's sit down and talk IP and how we actually procure your service. Because those are quite long and sometimes difficult conversations. Rather put them back to a point when you know it's actually going to be worth having that conversation. Think about whether you want to do it yourself internally, whether you want to outsource, whether you want to partner with other companies. There are some great outsource organizations out there. Mass Challenge is one of the partners of Forward, or at least members are. Great program working with corporates on impact. You've got the Free Electrons program that I mentioned earlier on. Then there are sort of industry-wide ones you can join in, that you can look to. The Arena in Australia. There's EIT, Energy here in Europe, again for energy ones. Constant storytelling, super important to keep everybody engaged. You just continuous marketing, both internally and externally, super important. Start small, then scale, both with experiments and process, and do design for emergence. Know that the solution, that the idea that a team starts with is quite likely not going to be the one that they actually are ready to scale. So don't kill those, because there's some good ideas that will come through that process. And also the same with your pipeline and your program design itself. you'll learn a lot along the way, which again pushes you to start small, move fast, and build those learnings into the design as you scale. That's the theme, the main approach to the existential innovation framework that we're using at Edasi. The idea is to use this collective innovation for our biggest challenges that humanity is facing. So we help governments and corporates to start small, move really fast, and then collaborate with the whole of society on whatever their boldest visions are. We're discussing the first one with the Estonian Ministry of Economics at the moment on that one. So that should be exciting. Thank you. Have I missed? Oh, no, it's coming. I'll come back to that one. Now is the time to be bold. We don't have time actually just for incremental change now. So be bold, innovate, build out scalable programs and build them fast would be my call to everybody here. And thank you very much. Mihak, didn't really leave a lot of time for questions. Do we have any?
I'm going to slide in a few very quickly. I love what you say about being bold, but is corporate innovation suffering when there's economic considerations and economic tightness globally?
I would suggest, and so yes, in those who are more conservative in their approach, I would suggest that's absolute madness, because it's these constraints that actually create the ideal environment for innovation. It's when you actually start cutting out noise and you see the biggest challenges in front of you that actually the most innovative ideas come out. So now is actually, I'd say, the time to do that.
And do you see any difference in this innovation pipe? Go ahead, Callum.
Yeah, sorry. Continue. I'm just going to put that last slide back up.
I was going to ask you if you see any difference in building the innovation pipeline when you're implementing sustainability-focused innovations versus, let's say, tech innovations.
Do you know what? Yeah and no. Yes, in that, as I said at the start, to get these sustainability innovations, get the backing for them, like genuine backing, not just a sort of spot in a talking spot, but actually genuine commitment from an organization, is they need to be twinned with other business strategic or strategies in there, right? Other business objectives. With the technology side, I was going to say no, because it's normally easier to get a sort of technology idea through, because the organizations normally already associate that technology with their business approach. But again, simple sales, that technology still has to support their business objectives. So I guess in that point, they're the same. It's just the conversations are a little bit longer on the sustainability side.
And Callum, tell us, a bunch of corporate innovation programs fail to scale beyond the pilot stage. Do you see any common pitfalls or common points where they stop? Is it really this lack of emergence or adaptation, or are there too many to state out?
I think that's, again, I would say it's a design challenge in there, because that next stage is quite often not fully thought through in there. If you know at the start that your goal is to create spin-outs, to change internal processes, to whatever that design is, or whatever that goal is, and where that sort of aligns with business objectives, you then need to design back from there. So your pilots need to be about proving that it's now worth taking that next step. If that's not built in, I find that that's quite often where it stops, because there's like, cool, there's a pilot, let's actually see if this solution works, and forgets about the pilot is actually meant to now convince the relevant stakeholders to invest in taking it to the next stage.
Fair enough, yeah. So the what next gets lost there. But thanks so much for this session, Callum, and thank you all for joining us as well. And do remember, whether you're building a climate startup, whether you're running ESG initiatives at scale, or much like today, wanting to implement a culture of innovation that doesn't die off at pilots or hackathons, do remember to reach out to Forward. And we'll support you with a team of over 50 experts like Callum across the sector. So read more on forward.earth/consulting. But that's all for today. And thanks a ton, Callum, for your time. I think this was super insightful for those who joined us.
Thank you very much, Mihak. Thank you very much, everybody who joined. And looking forward to hearing from you.